Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of March 17th through March 21st. We're in part one of our weekly trading game plan. We'll discuss the FOMC interest rate decision for March of 2025 and how we can make money trading the FOMC interest rate decision of March 2025. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for March 17th through March 21st. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trading ideas for this trading week. You can find a direct link to this Google document in the description box below. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes documents. And you can also find a direct link to this Google Drive folder in the description box below. Welcome, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. Gerald Fitz, hope you're doing well as well. So firstly, we'll look at how the markets ended up on Friday, and then we'll look at a breakdown of the major indices and the technology components. So we can see we had a strong relief rally on Friday. So all of the indices were up significantly. The Dow was up 1.65%, NASDAQ up 2.61%, S&P up 2.13%. So again, a very strong relief rally on Friday after pretty much a down week. We had almost 78% advancing, so very broad rally, only 20%, 19% declining. We had 32% new highs, 67% new lows. We've only got 30% above their 50-day moving average, 70% below, so still a lot of weakness. And we've only got 34% above their 200-day, 65% below. So again, although we had this strong relief rally on Friday, still a lot of weakness under the covers. So it shows, pretty bullish for Friday. Mag 7s recovered significantly, so strong update for all the Mag 7s. Not a whole lot of red, couple healthcare, some consumer defensive, so much more of a risk on day, as we'll see on Friday after mostly a risk off defensive week. Got some of the news. Dow pops more than 650 points in a relief bounce Friday, but still post worst week since 2023. So again, although we had that strong relief rally on Friday, overall week was poor in the markets. Stock market gyrations since election. China to crack down on stock market fake news. Dow rises after shutdown averted, so some of the positive bounce due to the aversion of the government shutdown. Don't have to worry about that now again until September. Wall Street battered by Trump chaos. Market chaos coming. But he says investors should wait to buy again. So again, we'll see if we get follow through or if this was just a one-day relief rally. See, oil's been bouncing above 65, below 70, sitting about 67, but generally long-term trend down. Natural gas been very volatile, good support at 4, resistance about 450, again, a lot of volatility. Gold made a new all-time high, up over 3,000, retreated slightly, just below 3,000. We'll probably see it retest that 3,000 level. If it gains up above 3,000, more upside in gold. And we see all the futures pointing strongly up at this time. So bond yields did bounce up a little bit on Friday, but we've still only got the 30 at 4.6. 10-year at 4.3, 5-year at 4.0. So the past couple of weeks, we've seen a significant drop in bond yields, although bond prices only up slightly. Bitcoin broke back down under 85 again, so support at 80, resistance at 85. Got a breakdown of the indices and the technology components. Just a reminder, you can also see these screeners in the screener sheet of our ETFs and Watchlist Google Sheets. Welcome to Ricky Khan. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at all the major indices, we see the Dow rejected off that double top. We'll see all the indices once they reach that top. We've had a significant downturn. Dow still below its 200-day. Didn't quite reach that lower trend line. Again, we got that very short relief rally on Friday, but again, most of the week just straight down. So we'll see if we get a follow through retest of the 200-day, and then again, potential downside down to that lower trend line. IWM, Russell, again, very weak. So it's very near its August low, significantly below its 200-day, 50-day. Looks like we might even get a death cross on the IWM. So again, a lot of weakness there. It's going to be sensitive to the FOMC interest rate decision this week. So if we don't get a rate cut, although people, as we'll see, the probability of rate cuts pretty low. Again, more potential downside in the IWM. Qs, again, a little bit choppier, but pretty straight down since making an all-time high again in February. Got that short relief rally, but again, a significant downside back to its August low. So again, a lot more potential downside in the technology in the NASDAQ. Similarly, the SPY bounced up to that lower trend line after steep decline since that high in February. Again, significant potential downside to the September low, to the August low, etc. So again, might get a retest of that 200 and then more potential downside. Welcome to Crow. Thank you for joining us. Hope you had a great trading week as well. So we'll also look at my screener for the technology components. And one of the changes I made in this technology component screener this week is I replaced FANG-U, which was the leveraged long on the FANG stocks, with QQQU, which is the leveraged long on the Magnificent Seven stocks. It looks like they discontinued FANG-U. FANG-D is still available, apparently, but since they discontinued FANG-U, I've removed that from the technology component screener, replaced it with QQQU. And again, the inverse for QQQU, the short on the Mag 7s, leverage short on the Mag 7s, is QQQD. So we'll use those going forward to watch the Magnificent Seven stocks. And again, I've replaced those screeners in our screener sheet in the ETFs and Watchlist Google Sheets as well. So if we look at the technology components, again, you can see ARK-K broke down below its 200-day, got some support from that lower trend line, kind of chopping along that lower trend line, resistance from the 200-day. So expect more lateral chop in ARK-K. LabU, biotech, chopping along, resistance on that lower trend line, downward sloping support, downward sloping moving average, again, sensitive to interest rates. So again, we don't get any cuts, more potential downside in biotech. Magnificent Seven, you can see they came down, broke down through their long-term moving average, bounced off that lower trend line, got a little bit of a relief rally, and then again, more potential downside to the August low, September low. StockXL broke down below its multiple bottom, down below 20. Did get a little bit of a bounce on Friday. We'll talk. We do have the NVIDIA GTC conference this week. Might give us a little pop in semiconductors in general. But again, otherwise, it's a lot of weakness in semiconductors. TQQQ just leveraged long on the NASDAQ, so similar behavior, steep downtrend, slight relief bounce on Friday, but again, it looks like it tested that September low, held up there. We got more potential downside to the August low. Broad technology very similarly, didn't quite get to the August low. Steep downtrend, quick relief rally. See if we get any follow through or again more potential downside to that August low in broad technology. So I hope that all helps. Welcome, Katon. Thank you for joining us. Hope you had a great trading week and are doing well. Okay, let me grab a quick drink and we'll go over the groups, sectors, industries. I want to take a quick look at countries as well. We talked about international markets last week and take a look at some potential opportunities in international markets again. So Friday again, if we look at the groups, sectors, the industries, etc., see we had a strong rebound, more risk on Friday. So technology rebounded the strongest, consumer cyclicals, real estate, energy rebounded, financials as well. But for the week, very defensive. So a lot of talk about recession and people are kind of fleeing to what they view as recession-proof sectors. So we see energy, utilities, basic materials, and financials the strongest. But again, very risk off. So communication services, healthcare, technology, real estate, all down. Also defensives down. So again, more of a recession-proof bent for the week. Similarly for the month, energy, the least negative, utilities, basic material, and healthcare. Technology and consumer cyclical, again, deep slope down in the Mag 7s, drag those sectors down. Industrials, also again, a lot of talk about concerns about a recession. So again, these sectors that are viewed as recession proof and where people are fleeing, except for these relief rallies. So welcome, MD Fairchild. If I missed you earlier, thank you for joining us. Hope you all had a great trading week and are doing well. So if we look at an industry breakdown, so a lot of relief rallies on Friday, oil rebounds, real estate, REITs, steel, basic materials, copper rebounded. So again, mostly green for Friday. We'll look at who the laggards were. So grocery stores, department stores, so a lot of weakness in retail. Again, concerns about recession, tariffs, etc. For the week, basic materials strong, silver strong, copper, gold, oil, aluminum. Semiconductors did have a rebound. A lot of the REITs were weak, however. Solar pretty weak. Farm products, talk about a lot of bankruptcies, distressed farmland in Nebraska, etc. Probably driven by tariff concerns. High rates, REITs mostly negative. Retail, again, a lot of weakness in retail. For the month, again, materials, silver, steel, gold. Again, REITs generally negative. Coal negative. Solar very negative. Coking coal as well, we've been talking about. Airlines, again, warnings by Delta, etc. So big dip in the airlines and travel and leisure stocks. Uranium very negative for the month. So again, opportunities we'll talk about again in uranium. transports. So again, concern for future recession. Let's look at international markets again very quickly. So again, we can look at the countries here quickly and FinViz, see what other international markets might be outperforming. See, Brazil had a nice bounce, Hong Kong, a lot of European markets, Malaysia had a bounce, Japan, Mexico rebounded, China's been swinging back up, been relatively strong lately. And European markets, some retracement of South Africa had been strong. So for the week, Argentina, Brazil, Spain, South Africa positive. China just slightly positive for the week. South Korea, Mexico, slightly negative. So the weakest, Singapore, Malaysia. Again, we saw a rebound on Friday. So again, last week we talked about additional ways that you can see the performance of international markets, and we have a number of ETFs that you can look at to trade some of these international markets as well. So again, we're focusing more on potential opportunities in other markets. So I hope that all helps. Okay, next we'll talk about the economic data from last week, and then we'll look at the economic data upcoming for this week, including the FOMC Interest Rate Decision for March. Just a quick reminder, as quickly as possible when this important economic data comes out, important economic news, try to capture that and post it as quickly as possible in the Surf the Markets channel of our Discord. Our Discord's free to join. You can see there's a free invite in our notes, also in the description box below. Just to quickly show you. Again, as the important economic data comes out, try to capture that, screenshot from investing.com, raw data, any important economic news, and again, post that in the Surf the Markets channel of our Discord. So Discord's a great source of real-time economic data, real-time economic news. We also have a number of channels where you can discuss all things trading, various asset classes, using different trading styles, different trading platforms. Again, our Discord's free to join. We'd love to have you join and actively participate in our Discord. Again, you can chat in our Discord 24/7 with all your fellow BeachBum traders. So firstly, some highlights of the economic data from last week. Not a whole lot Monday, Tuesday. Wednesday, we got mortgage rates. So 10-year bond yield continues to drop. So mortgage rates continue to drop. Positive for the housing sector. Applications, though, were positive, but down from previous. And we got CPI data, slightly lighter than expected, so that's positive for the inflation curve. So core CPI was only 0.2 versus 0.3 expected. Year on year, 3.1 versus 3.2 expected. Headline CPI month on month, 0.2 versus 0.3 expected. Year on year, 2.8 versus 2.9. So the Fed would like that downturn in CPI, particularly core CPI. It's still above their 2% target significantly, but again, heading in the right direction. So that's a positive for the Fed. We also see Thursday, we got PPI data, so producer price index, and the core month on month actually went negative. For the first time, it was expected to be slightly positive, went negative. So producer inflation deflating year on year, 3.4 versus expected 3.6. Headline was flat. So again, very positive inflation data Wednesday and Thursday. Market didn't really react as positively as one would expect. So that's an indication of the poor sentiment in the market, very bearish sentiment in the market, the fact we didn't get a positive reaction to that cooling inflation data. Again, That's what the Fed wants to see, cooling inflation. We also got jobless claims data, not bad either. So initial claims, less than expected. Continuing claims, less than expected. So the job market remains resilient. Inflation is cooling. So again, all good data from a Fed standpoint. But again, since the job market's not significantly deteriorating, inflation is still significantly above their inflation target. There's no need for them to cut anytime soon. I'll talk about some of the other reasons I don't think they'll cut when we do our strategy for this week. Welcome, Aura Alpha. Thank you for joining us. Hope you had a great trading week and are doing well. So Friday, got some concerning data. The Michigan consumer sentiment data. Their one-year inflation expectations went up significantly from 4.3 to 4.9. So the consumer's expecting much higher inflation. Their 5-year went from 3.5 to 3.9. So again, although we saw the CPI and PPI data coming down, the consumer's expecting higher inflation going out even 5 years. Significant deterioration in their expectations and sentiment. So consumers starting to really feel quite negative. And even though we got this very negative data from the consumer standpoint, the market rallied. So again, the market's moving contrary and contradiction to the data we got, which is again a little unexpected, but probably due to the bearish sentiment. This is going to be concerning to the Fed that they don't want to see. They want inflation expectations to be anchored with the consumer, and the fact that this is going up again will be a negative, and possibly again a reason they'll want to stay higher for longer. Very quickly, next week we've got the NVIDIA GTC conference all week. So expect some pumps in the AI stocks, semiconductors, NVIDIA, etc. Whenever Jensen Huang's keynote address is, any other news, they have a tendency to announce partnerships, pump other stocks. So again, we'll probably see some pumps in the AI stock, data centers, semiconductors, any other stocks that they mentioned partnerships with, investment stakes in, etc. So watch those stocks all this week, particularly again around Jensen Huang's keynote address. Wednesday, so the big news is again the FOMC March 2025 interest rate decision. So we'll get that on Wednesday. We also get a dot plot, so we'll get their decision on Wednesday at 2. Expectation, as we'll see, also later is no change. So we don't expect any cuts, any hikes, etc. And we'll look at those probabilities in the near future. We'll get their statement. We also again get their dot plot, their economic projections, their SEP. Last we saw the 1-year expectations was 3.9, so some decrease in the next year. Current quarter 4.4, so essentially very little change. 2 years out, we're down to 3.4, so about a point below where we currently are, and longer term headed to 3. So we'll see if that those economic projections, those interest rate projections, flatten out, pull up, etc. So in my humble opinion, I do expect these projections to flatten out, to the dot plot to flatten out, and we'll take a quick look at the previous dot plot in the CME FedWatch tool as well. So again, we'll see what changes there are in these projections, see how that dot plot, if it does flatten out, as again, in my humble I expect. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some minor entertainment purposes only. Also, Friday is OPEX for March. It's options expiration. It's also a quad witching day. So if you are unfamiliar with what that means, all the options, weekly, monthly options, and futures all expire on the same day. So expect significant volatility both around the Fed interest rate decision and then on OPEX. Also, again, in my humble opinion, we don't expect any changes in the Fed rates. So what's going to be important is what Powell says during his press conference on 2:30. Again, in my humble opinion, I think he's going to cite the uncertainty around the tariffs, the administration's policy with immigration, tariffs, etc. And they're going to defer to get more data as to how the impact of those tariffs are actually going to impact inflation, impact unemployment. Also, you've got the DOGE cuts in government employment. So again, I think he will be stressing the uncertainty around those policy decisions and having to wait to see the impact in the data, and that's going to take a significant amount of time. So again, that's my expectations. A lot of discussion by Powell on the uncertainty due to the administration's policy, and that they're going to have to wait to get more data on the impacts on inflation and unemployment before they can make any further cuts. So, okay, let me grab a drink and we'll go over the rest of the economic data from last week and then look at the economic data upcoming for next week. Welcome, Sydney Osborne. Thank you for joining us. Hope you had a great trading week. You're doing well. So this week had some bond auctions, not too bad. JOLTS data also. So it's interesting. We got more openings than expected. So again, more indication that the job market's holding up right now. Not any deterioration, even with the start of some government layoffs. So, and job markets are holding up right now. So again, a reason that the Fed can deter cuts. Again, we talked about mortgage rates and CPI. Real earnings still positive. Oil inventories up, but less than expected. Again, we're still seeing oil prices down. Ten-year note auction, not bad. Talked about weekly jobless claims and PPI data. Natural gas storage down more than expected. The long-term trend still up. A lot of volatility in natural gas. Talked about Michigan consumer sentiment. So Baker Hughes oil rig count up 1, total rig count flat. So not a whole lot of change. Again, oil prices trending down. Got the data for next week. So Monday we've got retail sales. That'll be somewhat interesting. See if that has any impact on the market. We've seen some deterioration in retail in general. So we'll see if the retail sales is down for February. It's expected to be positive. Previously it was negative. So again, could be very negative for retail sector. Inventories expected to be up. I think a lot of retailers are probably trying to front run the tariffs. So my humble opinion, I think inventories are going to be up. Building sector, housing starts. We'll see if the lower mortgage rates is benefiting the housing sector at all. Industrial production, see if we're getting further weakness in manufacturing and industrials. Mortgage rates. Then again, we get the FOMC March 2025 interest rate decision. So again, probably some light trading waiting on that decision, although again, we don't expect any changes. We get weekly jobless claims data, natural gas storage, etc. And then Fed officials start talking again already. So got a short reprieve up until they make their decision, and then they'll start talking again. Probably have a little bit of earnings left, but the vast majority are done. So you can see who's left to report earnings. Got some miners, some housing, Getty Images related to the merger with Shutterstock. We'll talk about. You can see who's left earnings, 3D printers, etc. So you can see that whole list in investing.com. See how that'll impact any of your trades, maybe your current holdings. Got some biotechs, etc. I hope that all helps. Again, FOMC meeting 18th, 19th. And hear how we trade around earnings. Again, you'll see a lot of volatility around earnings, more so their guidance than if they're beating. If they miss headline numbers, they get punished severely. But also we see a number of companies like Delta, etc., expressing concern going forward. That's causing some downturn. So if you hear other warnings from other companies going forwards, could be negative for that company as well as those in the same sector, etc. So we saw that whole travel and leisure sector dump on the Delta warning. So let me grab a drink and we'll go over the market screen in Webull. Okay, just a quick reminder, if you're not already using Webull, you can still get up to 20 free fractional shares of stock by opening and funding an account with as little as $500, each fractional share worth $3,000 to $3,000. If you use our affiliate link in the description box below, you can get all your free fractional shares of stock, take advantage of any other promotions they have going on at the time, and also help support our BeachBum trading community, all of which we greatly appreciate. So this is the market screen of the online browser version of Webull. We could see in the histogram, we had a lot more advancers, 4,800 versus only 1,400 decliners. Percentage of advance was generally quite small. So again, just a broad relief rally on Friday after a pretty steady downtrend all week. Net inflow, again, pretty steadily positive all on Friday. So both the NYSE and the NASDAQ had positive inflow on Friday. So again, pretty broad relief rally on Friday. However, you can see we've still got a lot of fear under the covers. So Thursday, we hit the lowest fear rating that we'd had probably all year. So it hit a 9 extreme fear. The previous week it was 13 extreme fear. So even though we got that relief rally, we're still in extreme fear. So protect your profits. Be prepared for that further downside to come. Yeah, their graph is a little messed up right now. Not sure what the issue is, but again, we see a definite downturn in the fear index, a lot of fear under the covers. Again, you can see the earnings calendar for next week here in the calendar widget in Webull. We look at the best performing industries for the week. Consumer goods, so defensive. Oil, energy, again defensive, perceived as recession-proof. Semiconductors, mostly negative. Again, oil, metals, so basic materials, utilities, again very defensive. People expecting a recession, moving into recession-proof sectors. Infrastructure positive. Insurance positive. Uranium pretty split. It's been rolling over, downtrending. Defense pretty split. Natural gas utilities slightly positive. Industrial goods negative. Water utilities negative. The ETFs. So up on the Russell, mid caps, small caps, again, mostly positive from Friday. Up on the Dow, up on mid caps. So you see some rotation in the mid caps. Up on the NASDAQ, up on Bitcoin. Up on the Russell, small caps. Mostly green from Friday. Natural gas positive. It must be soybeans. So there's a soybean long positive. And natural gas. High yield. Okay, let's look at the futures. Just a quick reminder too, you can trade 24 hours a day, 5 days, 24 hours a day, 5 days a week, overnight in Webull. You can get more information on overnight trading in Webull. You have the link to our video and the topic posted in our Discord. Also, you can trade futures in Webull. So you can take advantage of some opportunities in futures that we may not have ETFs for. So you can trade futures also in Webull, get more information via that discussion topic in our Discord. So if we look at the futures in FinBiz, and we see those strong downtrends, very quick relief rally on Friday, and all the major indices get lowest point, since before 2025, and a little bit more of a bottom in the NASDAQ, chopping around that bottom, so possibly finding some support. Maybe got a short-term capitulation in the S&P and the Dow, but again, if we don't get a follow-through, more downside to come. More weakness in the Russell. Nikkei bounce, maybe it's headed back up. Euro stocks topped out and rolled over, but it looks like it may be headed back up to retest its top, similar with the DAX. Down, tested the previous bottom. Looks like it's swinging back up. Saw a significant drop in the VIX on Friday, which is a little surprising because we got that negative consumer sentiment data. But again, I think it's just an artifact of the relief rally. So VIX dropped down just above 20. So 20 should be pretty good support. Again, if we get unexpectedly poor data, retail sales, etc., might see further upside in the VIX. See it popped up over 26 or so, quickly retraced, trended back down. Again, probably test that support again at 20. And oil been trending down for quite some time. Got support just under 66, hovering around 67. Get a little bit more dip in oil. We'll talk about how we're looking to play that opportunity now going forward. And natural gas been very choppy, but support at 4. Resistance, you can see that resistance at 450, spiked up to almost 5, came down very quickly, and then trended back down to that support at 4. Long-term trend definitely up. Again, you need to be quite nimble to trade, but we've got boil and cold, etc. If you're nimble and want to trade that volatility in natural gas. Again, gold broke a new all-time high over 3,000 after consolidating and retesting that 3,000 several times. It can hold that. Again, more upside potential in gold. Same way with silver, broke 34. So retrace slightly, got support now at 34. Holds that, then further upside in silver as well. Copper trending back up. Platinum and palladium trending back up. Corn generally trending down. Again, tariffs on the grains from China. So a lot of negativity in grains. Wheat did have a bounce. We'll see if that rolls over and heads back down. Soybeans surprisingly holding up so far, but again, tariffs from China, probably the largest buyer of U.S. soybeans. Cocoa trending back down, orange juice, lumber high, tariffs with Canada. Coffee slowly trending back down. Again, we saw bond yields down a little bit, but bond prices didn't really pop back up. It's holding a previous high support. We'll see if the lack of interest rate cut gets bond prices bound back up. Euro very strong. So we saw a big surge in the euro. See if that continues to trend up, down on the dollar. So dollar bounced off about 103. So downtrend in the dollar. Yen uptrending. So again, we haven't really seen more unravel of that yen carry trade, but possibly unraveling over time. Canadian dollar held up even with all the tariff trade war battles. Okay, let me jump forward and let's talk about our theme for this week, which is the FOMC Interest Rate Decision for March 2025. Grab a drink and we'll go through the Fed Rate Monitor tool, the CME Watch tool. Okay, again, our theme for this week is to look at the FOMC interest rate decision for March of 2025. We'll look at the probability for a rate cut, rate hike, etc., using the Fed rate monitoring tool and the CME Fed Watch tool. And you can find links to these in the notes, also in the links section of our homepage, beachbumtrading.com, bum without the U. Also got several videos on how to use the Fed Rate Monitor tool, also the CME Fed Watch tool. So let's look at those and see what the probabilities are for a potential rate cut, rate hike in March and then going forward. So again, here's the Fed Rate Monitoring tool on investing.com. We've got our countdown till the Fed interest rate decision for March. See right now the probability in the Fed Rate Monitor tool for March of 2025 is no change. So 98% chance we're going to get no change, 2% chance of a 25 basis point cut. See, that's been pretty steady for the whole week. So even though we got that lighter CPI and PPI data, this week didn't really change the probabilities at all, or the jobless claims data. Doesn't seem to have any effect on the expectations for the FOMC interest rate decision for March. So for May, we've now got a 75% chance of no cut, 25% chance of a cut. Go up to June. That's still, now we've got a 60% chance of a 25 basis point cut, 22% chance no cut, and about a 18, 17% chance of two cuts. Go out to July. Again, one cut still most likely. September, now we've got two cuts most likely by September. October, still two cuts, slightly, some with three. And by December, got three cuts, a little bit higher probability than two. So in general, the market's expecting three through the end of the year. One by June, one other by September, and maybe a third by December. So let's also look at the CME FedWatch tool. So here's also the CME FedWatch tool. Again, we've got our countdown clock to the Fed next FOMC meeting. Got our probability for March of 2025, again, 98% no change. And we can quite easily jump forward. May, 71% no change, 28% over 1 basis or 25 basis point cut. By June, 60% chance we'll get one 25 basis point cut. July, still mostly chance of one, some chance of two. September, most probably we've got two. October, still two. Now December, pretty split between 2 and 3, slightly ahead for 2. Also in the CME FedWatch tool, you can see the dot plot, so we can see the chart, the previous dot plot. So again, we'll see if this moves up, see the expected interest rates from all the members of the FOMC, with the most probable in the middle. So you can see they were expecting below 4% in their previous dot plot, below 3.5 in 26, just above 3 in 27, and longer term flat at 3. So you can also see this in the table form. So this is, I think, the table form is pretty helpful. So again, the highest probability by the end of 2025 previously was below 4%. By 2026, quite a distribution. Then eventually down to 3. Again, we'll see if they flatten this dot plot out. If the near-term rates go up, maybe a curve down towards the longer term. Again, not financial advice, but in my humble opinion, I think they're going to push off rate cuts towards the end of the year. So maybe we'll get one in June. If we do get some deterioration in the job market, if they are seeing further progress in inflation. But again, the tariffs haven't really hit, so we're not seeing potential inflationary factors of the tariffs. Also, most of the government layoffs won't hit. Some won't hit till into October. Won't show up in the non-farm payrolls till probably November. So I think the Fed's going to hold their ammunition until later in the year, and be able to cut if needed, if they see deterioration in the job market due to government layoffs and the domino effect with government contractors. Also, you've got potentially Doge canceling government contracts, cause further layoffs. And we don't know the impact of tariffs. If tariffs reignite inflation, the Fed's going to be able to want to hold their rates higher for longer to fight off that inflation. So again, I think we're going to get a lot of discussion by Powell about weighting the level of uncertainty due to the administration's policies. And maybe we'll get a cut in June, a 25 basis point cut in June. And then I think they're going to hold off until late in the year, and we might get another cut in December. But as you saw, the market's still potentially expecting 3. I don't think we'll get 3, in my humble opinion, but we'll trade accordingly. So again, I expect a lot of volatility around Powell's comments during his press conference, and probably more market reaction based on that versus the decision itself, which is expected to be essentially a non-decision, no change. So let me know what you all think. Do you all think we're going to get 2, 3 cuts this year? Do you think we'll get a cut in June? Do you think we'll get a cut before the end of the year again? How do you think the Fed will react to all these policy administration policies, etc.? And how can we make money trading those decisions? And we've been talking about making money trading in March. We looked at the seasonality trends for March and also the winter. Next week, we'll flip over and head into the spring, and we'll look at the trends and market performance for the spring. So we've got a few minutes. So we'll go back and we'll look at some ETFs. So again, we use our ETF Google Sheet. Once we identify a potential opportunity, trade idea, we jump over to our ETFs Google Sheet, where we have ETFs you can trade long or short on that trade idea, on an index, theme, commodity, etc. And you can do likewise, get 24/7 access to our ETFs Google Sheet by joining our Patreon. I don't have any new additions for this week, and probably won't go into details on these this week due to time, but you can see some we've recently added. So again, we added one on New Zealand, and you can find these in the research sheet of our ETFs Google Sheet. We also have individual ETFs on individual stocks, so both long and short. Also added some on gold. So again, you can find all those and see the risk reward profiles, current performance, etc. for all of those ETFs in our research sheet. And we also have a lot of ETFs, again, for individual stocks, international markets, as we've been talking about opportunities in international markets. You see Argentina, Australia, etc. So you can do a find for various ETFs in our research sheet or in our main sheet. Anyone in the chat has a particular topic you want to look at ETFs very quickly, we can do that. Otherwise, I'll just spin through some of the potential opportunities right now. So we talked about travel. There's a broad one on airlines, not a big risk reward profile. Bitcoin volatility. Talked about, again, Brazil popped up a bit. And cannabis, got several. They're attractive, but again, potential issues with tariffs, not a whole lot of catalysts. China been doing well, so yin and yang, and we have some other topicals in our research sheet. Again, coal, we've been watching that C. We'll talk about that in more detail tomorrow. It's got BTU, EWZ, that is Brazil. So again, we've got others in our research sheet as well. Also, we saw that uptrend in Europe. I've been looking at Europe. Here's broad emerging markets we talked about. You see the trend in the euro. So I think the euro is going to roll over, trade that short. Uptrend in Europe. And plenty of them long and short on gold you can pick from with the risk reward profile that you like. And we've got a number on India, quite a few international markets. I know Easy Mike Keaton's been mentioning potash recently. We have a couple stocks, Mosaic, IPI you can watch on potash. There isn't a direct ETF on potash other than broad commodity ETFs. We talked about the downtrend in oil, natural gas uptrend. So again, oil and coal, trading the volatility, or UNG, UNL long. And we've got leveraged ETFs on NVIDIA and quite a few other single stocks. Any of the indices. It's interesting, this dry bulk shipping's been holding up. Again, possibly front running the tariffs. Also oil carriers holding up pretty well. Okay, we have short ETFs on the indices, on broad technology, etc. So if you think this relief rally is a one-day event, look further downside. Also bonds. The one we'll talk about again tomorrow that we're really interested in is the long on uranium. So URAX is a leverage long on uranium. It's based on URA. You see the 52-week low on URA is below 23. It briefly touched there, I think, about Thursday. If it comes back down again, we're looking for a long in uranium using URAX. You can also see the uranium miners are somewhat attractive, but I kind of like the broad exposure of URA with the leverage of URAX. Watching again Vietnam, Malaysia, Singapore, Thailand. Again, you can find ETFs for all those in our ETFs Google sheet. Wheat's coming back down, so might get another opportunity in that, although the impact of tariffs yet to be determined in that. So we get a bottom in wheat, swing back up, might get an opportunity using the WEAT, and yen trending up. Keaton's talking about the dry bulk, Baltic Dry Bulk Index. Yeah, that's what BDRY is based on, so you can look at that. Have to do a Google search for that. Just quickly checking the chat. So again, if anyone else has any other ETFs topics you want to talk about, we'll come back and try to pick up some of these other ETFs as we have time in the near future. And looking for opportunities in international markets. So again, I've been looking at several, THD with Thailand. We saw Malaysia had a rebound, etc. Again, you can search for a country, topic, commodity, etc. in our Google sheet. So we see here's THD I've been looking at. Not a whole lot of risk reward profile for the past year, but bottom to top, it is pretty low. So I think I need to adjust the bottom. It did make a new bottom recently, so it's been trending down. So Long term, possibly Thailand. They were getting some investment from SoftBank for data centers, but that seems out of favor again right now. Okay, we'll see if we get a pump in the AI theme, the data center theme from the NVIDIA GTC conference this week. So again, keep the ear out. What does Jensen Huang say? What companies he's partnering with, investing in? Might get some talk about quantum, etc. So expect those to provide some pop in the AI semiconductor sector. So that all helps. Again, if you have other ETFs you want us to look at, any other questions, stocks you'd like us to research, please put those in the comments to our video or in our Discord. Please tag us in our Discord. BeachBum Trading, all lowercase, no other characters, symbols, numbers, etc. Anyone else is an imposter, please ignore and report them. But again, you all can chat 24/7 in our Discord. Love to have you join and actively participate in our Discord. Also, we'd love your feedback on what we can do to improve our weekly trading game plans, any of our other videos, tools, resources, our Google Sheets, our community, etc. Please give us your feedback. Let us know what we can do to add more value for all of our BeachBum traders. Could also greatly use your help. If you'd please like our videos, help us try to get the YouTube algorithm to someday show us some love and share our content with more traders around the world. Also, we'd really appreciate your help if you directly share our content, repost our content on your social media sites. Again, help us grow our BeachBum trading community for a mutual benefit of all of our BeachBum traders. So thank you again to everyone who joined us in the chat today, everyone who's watching after the fact. We hope to see you all again back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan for March 17th through March 21st, where we'll take all this market analysis, trading strategies, trade ideas, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers or in several option strategies to generate income while we wait for our swing trading stocks to swing back up. So thank you again and have a great day.